Are you one of the millions of Americans diligently saving and investing with Acorns, but then scratching your head when it comes to tax season, wondering how all those tiny investments fit into your grand financial picture? You're not alone. For many Acorns users, the simplicity of rounding up spare change and investing automatically is a huge draw. But when tax time rolls around, that simplicity can feel a little complicated. Today, we're going to demystify the process of using Acorns with your tax software, ensuring you maximize your deductions, minimize your stress, and keep more of your hard-earned money. We'll cover everything from understanding the various tax forms Acorns sends, to importing your data directly into popular tax software like TurboTax and H&R Block, and even troubleshooting common issues. By the end of this video, you'll feel confident tackling your taxes with Acorns data in hand, turning what might seem like a daunting task into a straightforward one. Before we dive into the nitty-gritty of tax software integration, let's set the stage by understanding what kinds of taxable events can occur within your Acorns account. Acorns offers a few different account types, and each has unique tax implications. First, there's the Acorns Invest account, which is a standard taxable brokerage account. This is where most of your roundups and recurring investments go. The key thing to remember here is that anytime you sell an investment for a profit, even if Acorns automatically rebalances your portfolio, that profit is a capital gain and is taxable. If you hold an investment for less than a year before selling, it's a short-term capital gain, taxed at your ordinary income tax rate. If you hold it for over a year, it's a long-term capital gain, which typically benefits from lower tax rates. Dividends you receive from your investments are also taxable income, whether they're reinvested or not. Next, we have Acorns Later, which refers to their IRA, individual retirement account, options, traditional, Roth, and SEP IRAs. These accounts offer significant tax advantages. Contributions to a traditional IRA may be tax-deductible in the current year, and your investments grow tax-deferred until retirement, meaning you don't pay taxes on gains or dividends until you withdraw the money in retirement. Contributions to a Roth IRA are made with after-tax dollars, so they are not tax-deductible, but qualified withdrawals in retirement are completely tax-free. SEP IRAs are for self-employed individuals and small business owners, offering similar tax-deferred growth. The main takeaway for Acorns Later is that you generally won't have taxable events within the account itself during the year, beyond potential deductions for traditional IRA contributions. Finally, there's Acorns Early, which is a UTMA/UGMA custodial account for children. While the account is in the child's name, the kiddie tax rules can apply. Essentially, a portion of the child's unearned income, like dividends and capital gains, might be taxed at the parent's marginal tax rate once it exceeds a certain threshold. It's important to be aware of these thresholds and potentially consult with a tax professional if your child's Acorns Early account generates significant income. So, how does Acorns communicate all this tax-related information to you and the IRS? Through a series of essential tax forms. Knowing what these forms are and when to expect them is crucial for a smooth tax filing experience. The most common form you'll receive for an Acorns Invest account is Form 1099-B, Proceeds from Broker and Barter Exchange Transactions. This form reports the proceeds from sales of stocks, bonds, and other securities. It will show the date you acquired the investment, the date you sold it, the sales price, and importantly, the cost basis, what you originally paid for it. This form is absolutely critical for calculating your capital gains and losses. Acorns will also send you Form 1099-DIV, Dividends and Distributions, which reports any dividends you received from your investments during the year. Remember, even if these dividends were automatically reinvested, they are still considered taxable income. For Acorns Later accounts, if you contributed to a traditional IRA, you might receive Form 5498, IRA Contribution Information. This form reports your contributions to the IRA for the year. While Form 5498 is for informational purposes and you don't typically file it with your return, it's essential for verifying your contribution amounts, especially if you're claiming a deduction. If you took a distribution from an Acorns Later account, you would receive Form 1099-R, distributions from pensions, annuities, retirement or profit-sharing plans, IRAs, insurance contracts, etc., which reports the amount and type of distribution. Acorns typically makes these forms available in your account documents section by mid-February each year, well in advance of the April tax deadline. You will usually receive an email notification when your tax forms are ready. Make sure your email address on file with Acorns is up to date to ensure you don't miss these important notifications. Now, let's get to the main event, how to integrate your Acorns data with your tax software. The good news is that most popular tax software programs, like TurboTax, H&R Block, and TaxAct, offer direct import capabilities for brokerage accounts, including Acorns. This can save you a tremendous amount of time and reduce the chances of manual entry errors. Let's walk through the general process, keeping in mind that the exact steps might vary slightly depending on the tax software you're using and the year. Step 1. Gather your Acorns tax forms. Before you even open your tax software, log into your Acorns account and download all relevant tax forms, 1099-B, 1099-DIV, etc. Have them readily accessible, either printed out or open in a separate window. Even if you plan to import, having the forms on hand serves as a valuable reference and allows you to double-check the imported data. Step 2. Start your tax return and navigate to investment income. Once you're in your preferred tax software, begin working on your federal tax return. When you reach the section for income, you will typically find categories for investment income or stocks, mutual funds, bonds, etc. This is where you'll want to go. Step 3. Choose to import from your brokerage. Most tax software will give you the option to import from a financial institution or import from my broker. Select this option. You will then be presented with a search bar or a list of popular financial institutions. Step 4. Search for Acorns. In the search bar, type Acorns. Acorns Invest or Acorns Financial will usually appear as an option. Select it. Step 5. Log into your Acorns account through the software. The tax software will then prompt you to log into your Acorns account directly through their secure portal. You'll need your Acorns username, usually your email address, and password. This is a secure connection that allows the tax software to pull your tax data directly from Acorns. Step 6. Authorize the import. Once you've successfully logged in, the tax software will typically ask you to confirm which tax forms you want to import, e.g., 1099-B, 1099-DIV. Select the relevant forms and authorize the import. With that said, thanks for watching and until next time.